The investment world is changing faster than ever, and 2026 is shaping up to be a pivotal year. What worked in the past may no longer guarantee growth, and smart investors know this. Those who adapt early are positioning themselves to ride the next wave of wealth, while those who stick to old strategies risk being left behind. From stock market shifts to emerging technologies, global economic trends, and rising inflation, investors are re-evaluating every aspect of their portfolios. The question is, are you ready to adjust, or will you keep following strategies that no longer work? In this video, we'll explore why smart investors are changing their strategies in 2026, the trends they are capitalizing on, and the steps you can take to protect and grow your wealth. Investing has always required adaptability, but recent global changes are making this principle more critical than ever. Economic uncertainty, interest rate fluctuations, technological innovation, and the rise of new asset classes are forcing even seasoned investors to rethink how they approach growth. For decades, investors could rely on traditional approaches, buy and hold stocks, diversify into bonds, and focus on long-term gains. But 2026 is different. Market volatility, geopolitical instability, and shifts in consumer behavior are creating both risks and opportunities that demand more strategic thinking. In this video, we will break down 10 reasons why smart investors are changing their strategies in 2026, explain what this means for you, and highlight actionable tips to stay ahead of the curve. Before we start, if you enjoy learning about investing, financial growth, and wealth strategies, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss content that could help you grow your wealth in today's dynamic economy. 1. Rising inflation is changing portfolio allocation. Inflation has been steadily impacting purchasing power, and traditional safe assets like bonds are struggling to keep up. Smart investors are shifting their focus toward assets that can outperform inflation, such as stocks in growth sectors, commodities, and real estate. By adjusting allocation, they protect their portfolios from devaluation while positioning themselves to capture returns that outpace rising costs. 2. Technology and AI are reshaping investment opportunities. Artificial intelligence, blockchain, and automation are transforming industries at an unprecedented pace. Investors are moving capital into sectors benefiting from technological disruption, from AI-powered platforms to renewable energy and biotech innovations. Those who ignore these trends risk missing out on industries that could drive significant wealth in the next decade. 3. Globalization is driving new market trends. Emerging markets are presenting opportunities that were previously overlooked. Smart investors are diversifying internationally to capture growth in regions where economic expansion is faster than in traditional markets. Diversification across global markets not only spreads risk, but also provides access to high-growth potential sectors. 4. ESG investing and sustainability are becoming non-negotiable. Environmental, social, and governance (ESG) factors are no longer niche considerations. They are increasingly influencing corporate performance and investor behavior. Companies with strong ESG practices are attracting more capital, and investors are adjusting their portfolios to favor sustainability. Smart investors recognize that ESG is not just ethical, it can also enhance returns and reduce long-term risks. 5. Interest rates and bond yields are forcing portfolio reevaluation. Interest rates have a direct impact on bonds, mortgages, and other fixed-income investments. Many investors are finding traditional bond-heavy strategies less effective in 2026. As a result, they are seeking alternative income streams, such as dividend-paying stocks, real estate investment trusts, REITs, or peer-to-peer lending platforms. Flexibility in income strategies is becoming critical for maintaining growth and stability. 6. Market volatility requires dynamic risk management. Economic and geopolitical uncertainties are increasing market volatility. Smart investors are not panicking. they are adjusting their strategies with dynamic risk management tools. This includes hedging positions, using options or derivatives for protection, and diversifying across multiple asset classes. Volatility is no longer just a challenge, it's also an opportunity for those who are prepared. 7. Cryptocurrency and digital assets are entering the mainstream. Digital currencies and blockchain assets are no longer experimental. Many investors are allocating a small portion of their portfolio to cryptocurrencies, tokenized assets, and digital collectibles. While volatile, these assets provide diversification and the potential for high returns if managed carefully. Smart investors balance this exposure with traditional investments for a more resilient portfolio. 8. Real estate is evolving as a wealth strategy. Real estate continues to be a core asset for wealth building, but the approach is changing. Investors are moving beyond traditional residential properties to include commercial real estate, short-term rentals, and real estate funds that offer liquidity and growth potential. The goal is to leverage property assets for both income and capital appreciation in a rapidly shifting market. 9. Behavioral finance is influencing smarter decisions. Successful investors are studying human psychology to avoid common mistakes. Emotional decisions, fear of loss, and herd mentality can sabotage portfolios. In 2026, smarter investors are using data, analytics, and disciplined strategies to stay rational and avoid costly errors. Understanding your own behavior is just as important as understanding the market itself. 10. They are focusing on long-term wealth, not short-term gains. Finally, the core habit of smart investors remains the same. They focus on long-term growth. Despite changes in strategy, they are not chasing quick wins. They are adjusting their tactics to protect capital, optimize returns, and position for decades of compounding growth. Flexibility, education, and adaptability are combined with patience to ensure sustained wealth creation. 2026 is a year of strategic reevaluation for investors worldwide. Rising inflation, technology disruption, global market shifts, ESG trends, and digital assets are forcing smart investors to rethink old approaches. Those who adapt are finding new ways to grow wealth while mitigating risks, while those who stick to outdated strategies risk being left behind. The lesson is clear. Financial success depends not just on what you invest in, but how adaptable you are to change. By staying informed, diversifying, and focusing on long-term growth, anyone can position themselves for success in today's dynamic market. If you found this video helpful and want to learn more about investment strategies, wealth growth, and financial planning, make sure to like this video and subscribe to the channel. Also, leave a comment below. Which strategy do you think will be most important for investors in 2026? Don't forget to like, subscribe, and comment if you enjoyed this video. Your support helps us continue creating content that educates and empowers viewers to make smarter financial decisions. Thank you for watching, and we'll see you in the next video.